Welcome to Pulling Chain, the blockchain distributed ledger cryptocurrency news channel for the capital markets industry. I'm Steve Edge. Well, last week we talked about the developments in the exchange space, and they seem to keep on coming. The Japan Exchange Group announced its consortium to develop distributed ledger technology. They'll be testing proof of concepts over the coming months, including exchange trades utilizing the Hyperledger platform with IBM Japan. JPX has been working with IBM since February, and this announcement is an expansion of this project, though it seems to be the usual let's investigate blockchain as a consortium and we'll see how it goes. But there's a lot going on in Japan nonetheless. SBI Holdings, a financial services company, is involved with the Ripple platform for payments, which we previously reported, and I recently saw that Coincheck, a Japanese FX Bitcoin exchange, has started accepting Ripple payments as well. And the Japanese government plans to scrap its VAT tax on Bitcoin transactions. I'm sure we'll see further developments from Japan, but like most blockchains and capital markets, it's still wait and see. Well, on the topic of exchanges, Deutsche Börse with Deutsche Bundesbank, the German central bank, announced that they have been developing a delivery versus payment securities settlement system. Also based on the Hyperledger platform, the prototype intends to investigate the feasibility and scalability of several post-trade features such as digital coin payment, reconciliation, regulatory reporting, T+0, and simple corporate action settlement. The press release mentioned centrally issued digital coins, implying that the central bank could be issuing its own digital currency in the future. The model is addressing the current infrastructure of settlements through a central bank based on existing laws and regulations. However, the concept of distributed ledger technology will do away with the central control since, by its very nature, it is distributed or decentralized. Assets can be written to and verified from the blockchain directly, and historical transactions can never be edited. Of course, regulations and laws are light years behind this enabling technology, but a new model for peer-to-peer settlement should be forthcoming instead. Well, now speaking of consortiums, there's been a lot of news regarding R3 and some of its initial participants leaving the consortium. Some news sources cited differences in direction of the group, and R3 is going to fail. Well, I think the heart of the matter is money. Nothing like greed to get the pulse racing. R3 was hoping to raise $150 million, which would be the largest investment in blockchain to date, but was only able to see commitments of just a fraction of that. I believe this because R3 owners were seeking too large a piece of the equity stake, and this put off a lot of other greedy participants who decided to leave the consortium. We'll likely see more announcements in the future for those that parted ways with R3. We don't see this as the end of R3, but just shakeout and consolidation. There's been a great deal of investment already, and they've recently announced that the platform Corda is now available as open source. Calypso Technology also announced that they had developed a trade confirmation system on Corda as well. The wheels haven't fallen off R3, just a few of the passengers got out of the car. PwC in Australia announced their Vulcan Digital Asset Services platform. The platform will allow for digital assets to be used in banking, commerce, investing, and trading. It promises to bring together personal financial services, day-to-day shopping, and the real-time view into your finances, all from your digital wallet. Well, if you look in your digital wallet now, you'll find cash, identification, loyalty cards for air miles or gasoline for your car. I think this is where the digital wallet is heading, not only to pay for items in Bitcoin, but expand upon what you already find in your wallet, but connecting it to a network. Hopefully, the Vulcan Digital Asset Services platform will live long and prosper. Well, I was at the Borsa Italiana Corporate Governance Conference last week to see if there was anything going on with Bitcoin and executive board accountability. There wasn't, as I had suspected, but the conference was excellent, well attended, the speakers were articulate, and it was clear that some of the issues they were discussing could conceivably be addressed with blockchain. I read a paper on the subject from NYU Stern professor David Yermak that detailed much of the conversation that I'd heard. I've linked the white paper below. If you're a corporate governance expert, maybe there's a blockchain startup opportunity for you. Lastly, in the previous episode, we talked about the price of Bitcoin in India trading at a premium driven by the government eliminating large rupee notes. I suspected that there was actually very little trading. It was merely media hype as the price of gold, an Indian staple, had in fact gone down. Well, I was able to find out that around 400,000 US dollars of Bitcoin was trading, or around 500 Bitcoins in total. So, to put that in perspective, the top two Bitcoin exchanges trade around 5 million Bitcoins per day. I'm not sure if the Indians are double counting, which wouldn't surprise me either. The government in India recently launched a campaign to encourage the use of digital currencies, so we're expecting to see volumes increase quite a bit. Now, if you have a project that you think might be viable in the blockchain space and you need an opinion or even some help putting your idea together, send me an email. Happy to take a look and provide some guidance. Well, that's all for me this week. Subscribe to the YouTube channel, or you can send me an email. You can contact me at LinkedIn, and I have put that link below as well. Enjoy the rest of your week. For Pulling Chain, I'm Steve Edge.